Ladies and gentlemen, thank you very much for waiting. We would like to begin SoftBank's investor briefing on earnings results for the fiscal year ended March 31st, 2020. We would like to introduce to you our speakers today. From SoftBank Corporation, Board Director, Executive Vice President and CFO, Fujihara. Vice President, Head of Finance and Accounting Division, Naito. My name is Naito. Vice President, Head of Strategic Finance Division of the Finance Unit, Hirono. My name is Hirono. All of the speakers are participating remotely due to the COVID-19 issue. This briefing is being streamed live on the internet. Without further ado, we would like to hand over the microphone to Mr. Fujihara to talk about the earning results. This is Fujihara. Thank you very much for participating in the investor briefing. Since our IPO, this is the 6th investor briefing for the earning results. So it's been 3 years. And the equity story that we have provided you at the IPO, where the growth and dividend payment will be balanced, and also our beyond carrier strategy. I hope that this opportunity will enable you to reconfirm those strategies through this presentation. I would like to move on. First, I would like to talk about the performance of fiscal year 2019, and then I would like to talk about the forecast. Next is our results. This is the summary of what Mr. Miyauchi has explained. In revenue, operating income, and net income, we have been able to post record high figures. For revenue, we had set 4.8 trillion yen, and we had made upward revision, and we were able to make 4,861.2 billion. As for operating income, originally we had said 890 billion, and then we had made upward revision, and the actual figure was 911.7 billion. It was the achievement rate of 101%. In the third quarter, there was integration of Line, and 19.5 billion was booked in advance for payment of tax. And because of that, net income was at achievement rate was 99%. Now I would like to go segment by segment in revenue. There was an increase of 200 billion, and all segments had contributed by growing in revenue. Out of that, Yahoo and enterprise business had grown double digits. The consumer business, in total, there was increase of 16.2 billion. And if you look at the right-hand graph, for telecommunication, their telecommunication service had grown more than 70 billion. And as for the device sales, it had gone down. And because of that, there was the decrease in revenue from sales of goods and others in the amount of 50 billion. In broadband, there was an increase of 6%, mobile 3% increase. The broadband had contributed more in the ratio, and in terms of the value, absolute value, mobile had contributed more.
Next is our enterprise segment. Business solution and others. So this is a new business. We see nice growth there. enterprise is we're working on doubling our profit. What's really supporting that is the growth of our new business, which is the business solutions, cloud, IoT, security, digital. All of these are the new things that are comprising this new business, and the contribution is now becoming outstanding. In the new year, we would like to continue to grow this business. Let me introduce Yahoo. Yahoo has already announced their earnings result. The increase in revenue was above 10% and has exceeded 1 trillion yen for the first time. The contribution commerce is very large. Zozo was also contributing by 57 billion. So these two have driven overall growth. In the new year, they will accelerate this. Next is operating income. Operating income have increased double digit by plus 93.5 billion. The right-hand side, you can see segment income, the breakdown. As you can see, the mainstay is consumer, is nearly plus 20 billion in increase, but Yahoo has also contributed by plus 16.4 billion. So all segments have contributed to the operating income. In here, if you look at others, PayPay has been consolidated on a retrospectively, and Cyber Japan have been switched to equity method. That's a plus 40 billion, excuse me. And there's others that have achieved a double-digit growth, so that is why we have seen a nice positive for operating income. Now let's look at the operating income. Year-on-year comparison. Yahoo and extraordinary factor, which is PayPay related, have been removed. And this is a summary of that. So if you look at in terms of revenue, this is approximately 100 billion in increase, among which, and this is included in consumer business, in the consumers sales of handsets. This is minus 97, which is very large, but otherwise it is increasing significantly. Every time there's a question about the trend in handsets. So we have given you a very detailed disclosure here. If you like the consumers sales, it's nearly 50 billion, but that's because we're also putting emphasis in power as well, electricity. So that's a 40 billion. So you can see COGS on the right-hand side. So you can see the COGS is about 97, it's about the same. So basically you can see that we're not making much margin here, at least in terms of number. But actually, in reality, this year, we had about 40-some% decrease in the inventory. Excuse me, it should be 50% down. So in other words, 40% above, 40 to 50%. So there's a significant reductions in inventory. This is improvement in reserve about more than 110 billion. So the margin decrease there has been offset from that. So that's what this number shows. And for example, telecom network charges because of Hikari, this is the impact from the COGS. And also with regards to the expenses, if you look at the expenses line, and when we sell handsets, we book margin, but we're also having acquisition cost. And so for the contract cost, acquisition cost, we levelizes between 2 to 3 years and book it. In that sense, until last September, so between 2018 to 2019, we had spent a lot of subsidies. And so that's one of the reasons why it's booked here. And also in the second half, subsidies we're no longer able to spend more than 20,000 yen. And then, but we have a lot of promotions that we have enhanced, for example, advertisement. And that is why there's about increase of 24 billion in sales expensive. With regards to depreciation, this is an increase of 120 billion. This is the application of IFRS 16. This is the impact of that. And you can see the conventional expenses have been actually booked as depreciation amortization. But if you actually exclude that impact, it's almost flat. And then if you look at outsources, the flip side of the coin is that we have been booking this as an expense have been actually booked as depreciation. So actually, expenses have increased by 50 billion. Maybe half of that you can say is cost, simply cost. Customer care or enterprise related, all the costs related are included in here. So that comprises half of this minus 50. Otherwise, that we are enhancing our network, and there are many structural reforms that we have implemented. We're expanding data center, and there's some accounting impact as well. And you build that up, and it's about 20 billion or so. That comprises about 50 billion total. And then aside from that, we have PayPay and Yahoo, which has already been disclosed already. So you can see an operating income of 911.7 billion for this fiscal year. So let's look at KPI for the telecommunication business. Cumulative subscribers. This is an increase of 1.76, which is 36.50 million. We have been focusing on smartphones, so please follow and watch over a trend in smartphones. We have increased by 2.05 million, which is 24.13 million. We have been disclosing by quarter. First quarter was 173, but you can see acquisition is increasing steadily. So you can see that smartphone acquisition is accelerating. On the right-hand side, you can see the breakdown by brand. You can see that 3 brands are playing its role, and you can see that it is growing as well. The 3 brands contributing to better churn rates. So churn rate improved significantly due to our multi-brand strategy. The Telecom Business Act amendment in October was also a nice tailwind, and you can see that there's an improvement of 0.13%, and 0.72%. In smartphone is minus 0.35%. You can see that this is a significant improvement. As Mr. Miyamochi said earlier, 1,200 stores are dual stores. So it's 1,800 are dual stores. That's about 60% of the overall 3,000 stores, 100, excuse me. So customer who wants to go large capacity or they want to switch to iPhone, they're most likely choosing SoftBank. And so, if they're coming from Y!mobile to SoftBank, and then if a SoftBank customer wants to go to a lower rate iPhone or smartphone, then Y!mobile will be the best candidate. And again, this is improving the churn rate. Let's look at the ARPU. You can see that this quarter we have seen a reductions by 60 yen in total ARPU. If you look at the ARPU before discount, this is down by minus 400 yen. This is we have implemented unbundling plan for the handsets, and also Y!mobile, LINE Mobile percentage have increased as well. And also when we did unbundling, we're reinforcing a family discount as well, and we're seeing increasing number of users with this family discount plan. In addition to this, we have this first year discount as well. So for 1 year, they get 1,000 yen discount, which is basically a service giving away 12,000 yen for the year. And in terms of how we book it, before the amendment of the law, it was 24-month effect. So every month we are booking 500 yen every month for 24 months. Now it's been unbundled, so there's no longer 2-year contract. So 1,000 yen in cash is given to the customers as a benefit. So we're now discounting that, treating them as a discount. So 500 yen, 24 months. We have the amortization of that, and at the same time, we're also disposing this 1,000 yen. So from Q3 until Q2 of the new fiscal year, for 1 year, we will be doing this dual writing off, which is a big impact on our company. So that is why discount is perceived as so it is increasing. In terms of discount, because of the unbundling plan, it's improving, and also 4-year installment still remains, even though it's decreasing. So as a result, this is an improvement of 340 yen. So offset is 400 yen. So this first year discount, we believe that Q1 this year is the peak. So we believe that this will expand furthermore. So in the new fiscal year, in Q1, Q2, this is a pressure on ARPU. So in terms of projections, I would like to comment more on this.
Next is broadband service. In broadband, it is steadily growing. We have been able to increase 470,000, so we have been able to exceed 6 million. And as you can see on the right, there is home bundle discount Hikari set, and we have been able to get to the 10 million level. When it's a set with Hikari, the figure is as you see here, and the churn rate is 0.3 to 0.4 contribution. And this has contributed greatly to the overall reduction of the churn rate. We would like to expand the contribution from this area. I would like to move on to talk about the net income. Last year was 462.5 billion, and there was a difference of 10 billion yen. There was a huge improvement in operating income, the financing income and cost. When IFRS 16 is applied, the interest rate is also recognized, and if we exclude that, the interest rate is improving, and the SoftBank has gotten the rating, which is good, and so the improvement is being clearly seen. So it is in the positive. And as for the shares of profit and losses of associates, and this is the upfront investment impact, and there are some sales of the equity method investments, and also there are some depreciation made, the impairment made. So the offset amount is put here. And income taxes. There are 2 points I would like to mention. One point is what you can see in the box in the upper right-hand side. The line integration, the upfront posting of tax payment of 19.5 billion. And last year we were able to use the deferred use of loss carry forwards in the amount of 12 billion yen. So that is the impact here. And as for the net income attributable to a non-controlling interest, ZOZO is now included in our consolidation. Next, I would like to talk about the capex. You see 369.8 billion. The plan was 380 billion, and some of the investments were postponed. There hasn't been change in the plan, and we have been steadily preparing, especially 5G. As for free cash flow, it's 524.2 billion. The target was 520 billion at the onset of the year, so there was an increase. The relationship of free cash flow with the dividend is very important. So we want to have more than 100 billion yen, and we want to keep it at that level at least. Supplementary comments about the adjusted free cash flow. The operating activities cash flow is 891.2 billion, and the securitization of installment sales receivables is 31.1 billion, and it's off balance on the Japanese standards. So from the IPO, we had been making adjustments. And from here, I would like, so subtracting the capex was 576.4 billion. And we have made investment to various new businesses, which is a little over 70 billion yen. And there was a profit of around 20 billion of the gain on sales of investments. So offsetting that with the investment cash flow, it's about 50 billion. And the adjusted free cash flow was 524.2 billion. And now I would like to talk about the additional investments to PayPay. As of May of last year, SBG, the parent company, decided to invest 50%. And I talked about that in the presentation then. In the second quarter, there was an investment in preferred stocks, and I would like to explain about that. Who will be paying for the financing going forward? We have decided that Holding and SoftBank will be doing so. But this is a finance business, so we need to have healthy amount of equity, and we decided to take the option of preferred stocks. This business is also depending on Paytm from a technological perspective. So relationship with Paytm is very important. And SBG's involvement is also critical because PayPay is still growing. So we decided to keep the voting rights as is. So the board of directors structure did not change. So if you look at the left-hand side, you see 25, 25, 50% as of the end of March. And after the conversion of preferred stock to common stock, after fiscal year 2022, Z Holdings and SoftBank KK will have 36% respectively. So that is the change made. Next is net interest-bearing debt. From third quarter to the fourth quarter, there has been decrease. And the first quarter and the third quarter, 100 billion yen was paid to the corporate taxes. So these are the quarters where there would be a cash out. The first quarter and third quarter, very severe. Second quarter, fourth quarter, little better. So because of that, the interest-bearing debt has decreased. And if you look at the net leverage ratio, it's 2.3 times. The last quarter was 2.5 times. In the last briefing session, we have disclosed 2.6 times rather than 2.5 times. When ZOZO had come to our group, of the ZOZO's balance sheet included the interest debt, but they were booking only 2 months. So we decided to put 12 months. And when LINE is integrated, we will be disclosing it in a similar manner.
So let's look at the major financing activities over this 1 year. Just in terms of funding, we funded about 3 trillion yen. We have arranged a syndicated loan. So this is to acquire Z Holding shares, which was about 450 billion. So we have finances on a syndicated loan. We structured an ECA financing. This is a Swedish financing scheme with and a guarantee that we have used. We have not actually, the time period is actually from May 2020. So, and also we have securitized the telecom service fee receivables and other installment receivables through self-settled trust. And then we have done other issues of corporate bonds. And at the end of the fiscal year, we have not used this facility, but from April, cash on hand is actually ample. And also regards to corporate bonds, in addition to issuance of short-term corporate bonds, we did this for the first time in terms of credit ratings. We're finally able to utilize it. So we have about 40 billion, but for the issuance of the bonds, but we would like to expand this going forward. So that was our actual. And let's look at the forecast for FY2020. So with regards to the guidance, it has already been published. So this is just for your clarification confirmation. Revenue for 4,900,000,000,000. Adjusted EBITDA 1,630,000,000,000. Operating income 920 billion. Net income 485 billion. CapEx 400 billion. Adjusted free cash flow 550. Dividends per share is 86 yen per share. So we would like to be positive on all sides. With regards to the impact from COVID, Mr. Miyauchi explained. So let me just supplement. With regards to consumer business, so we see significant decrease in shop traffic and of course decrease in handset sales. So that margin is diminishing. Meanwhile, churn is decreasing as well. So in terms of subscription itself, it's stable. But we're a company that is focusing on net additions. So in that sense, it's negative impact on us. I would say there is an impact. And also we see increasing data traffic. So we want to continue to explore business opportunities. With regards to enterprise business, we see delay in new contract conclusions. This is because of the counterparty issues of our customers, also our sales side as well. Because of some difficulties, you could say this is slow. Meanwhile, likewise for the consumers, in terms of number of subscribers, in terms of cumulative, it remains stable. Now again, remote work is increasing drastically, so this is again a big business chance. With regards to Yahoo, as Yahoo has already published already, but there's uncertainties in the ad placement. In particular, travel and restaurant, the impact is significant. So this will be offset by e-commerce growth. E-commerce is continuing to grow nicely. So there's negative and positive elements. I think it's important for Yahoo to manage both. In terms of Yahoo's financial business, they're planning to expand. So we would like to continue to work with them together on this. Now, if you look at our operating income, we have already given a guidance that we will be positive, but there's one characteristic in this new fiscal year, something that's different from the previous year. So I need to explain this to you beforehand. If you look at the left-hand side, you see FY2019 results. This is the breakdown in revenue. Now, in terms of revenue, even if you look at it from the first half and second half or on a quarterly basis, there's not that much volatility. In fact, the second half, there's a slightly larger revenue. In the past, I said that Q4, there's a lot of acquisition and acquisition costs, but now it's been levelized to 2 to 3 years. So just because there's increased acquisition doesn't mean that there's increase in cost and less profit. In light of the situation, in the previous year, so in FY2019, we have generated 61% in OI, operating income. Second half was only 39%. So this is a big gap from the revenue. You can see the balance between first and second half or quarterly basis is not quite balanced. And we have seen this trend from the past, but because of the amendment in the act, because of the unbundling of the handsets, and because of the first year discount in Q3, Q4, there's accumulation of expenses. In the first 3 months, it's only about 1.5 months. So it's not that much in Q3, but in Q4, the impact continues to get bigger. And also handset sales is decreasing. So the margin is decreased. So the levelized impact will come out be squeezed out very slowly, but gradually. So that will be impact on the second half. And so the first half, this is a peak that will continue. So if you look at it, 61% from the operating income, you will feel as though FY20 will seem very small. It will seem as though it will appear as though it's low. But you can see that that's the impact on the full year basis. Now, I mentioned about there's a question about coronavirus impact, but impact of the COVID-19, we're not thinking in just in one scenario. It could have an impact on Q1 only, maybe Q2, maybe if it's prolonged, then we will be different impacts. So we're looking at different cost reduction measures. Now, maybe if it settles down quickly, then we can maybe spend more expenses on the second half or after Corona. So it's not just one single scenario that we're working with. In any case, Mr. Miyaji said that he will be very much sticking with the 920 billion. So I hope you will see us be committed to that number. With regards to free cash flow in the new year, we will be looking at 550, 52 billion, excuse me. And we think we can be a little more bullish than this number, but at least we will at least achieve 550, excuse me, corrections, 550 billion. And we would like to have left for dividends as well. And we will have, line is one-time event, so we would like to do this with borrowings. So shareholder return, we've achieved both growth and shareholder returns. That's our core. And after 2 years since the IPO, even in our year 3, whether it be EPS or DPS, we will continue to increase our payout policy or dividend policy will be announced at the beginning of the year, and we will watch this and provide you with an update and make sure that we achieve it. And if there's a downward revision, there was a question about would we be reducing our dividend? No, we will not. I want you to know that we will not be reducing our payout. So that is all from me. We would like to take questions from the youth. So thank you very much. Continue to listen to us. Thank you.
We would like to move on to the Q&A session. We would like to take the question from analysts and institutional investors. Those of you with questions, please press on the raise hand button on the Zoom. We would like to designate you. We will allow you to talk. So when you're designated, please unmute yourself and pose a question. We would like to take as many questions as possible, and we would like to limit to 2 questions per person. Please press on your raise hand button if you have questions. I would like to designate from SMBC Nikko, Mr. Kikuchi, please. You're allowed to talk. Please unmute yourself and pose your questions. This is Kikuchi. In the earnings briefing, Mr. Kikuchi, your sound is a bit small. If you could speak closer to the microphone. Can you hear me? Yes. In the earnings briefing, I am not able to hear you. Sorry about that. Please continue. In the earnings briefing, I have not been able to listen to some of the Q&A because of the communication issues, so there may be some overlap. But forgive me for that. So there are 2 things. One is your thinking towards dividend. I asked a similar question every time. This term, I think you have a very conservative plan. And that's what Mr. Miyaji has said. I believe that you have had a very conservative forecast for operating income. On the other hand, for the free cash flow, as you have explained, there would be, you would be able to control the cash and there would be increase in the cash. But the dividend growth is only 1 yen. If the operating income had been better than you had expected, in line with that, would you be reviewing your plan for the dividend? If it seems that you have a rich amount of free cash flow, and I think that you still have room for providing more dividend. If you are not changing the dividend, even if you have a better operating income, I would like to know about that. So what's your view on this? Let me respond to your question. In terms of the dividend, we have to look at the quality of the income and other elements. So at the beginning of the fiscal year, I am not able to make assertions of what we will do. But what I can say is that there are some uncertainties, but we will be delivering what we have promised you. So the stable dividend and high dividend are our policies that will remain unchanged. Also, acquisition of Z Holdings, acquisition of Line. These are two events which have occurred. And if we exclude that, we would have had stronger free cash flow, but we did have those two major events. So we need to comprehensively think about our policies. But in any case, it's the originating point of the fiscal year. So we would like to commit to the figures that we have set out today. Thank you very much. Supplementary comment. Your previous policies, I think that rather than not changing the dividend, your intention is to thoroughly implement what you have promised about the dividend. That's correct. We have to think about the following years, and we need to carefully consider what the dividend would look like. Thank you very much. My second question. Next fiscal year on, your forecast for that. The telecommunication revenue is not growing so rapidly. So your beyond carrier strategy, I think, is going steadily, but income-wise, you have not been able to see the contribution from the new fields yet. So the dividend is not growing, and you're considering that the operating income will stay flat. So the elements which would contribute to the increase in the operating income or negative elements towards your operating income, what are you expecting? If you could briefly explain about the elements that you have in mind, that I would appreciate it. Next fiscal year on, well, it's very difficult to say because of the COVID-19 impact, but I would like to give you our concept of direction. So in terms of the smartphones, we are not satisfied yet. We believe that we can still grow. We believe that the 5G business will be our foundation of the business. There is more penetration of telework. And because of that, the value of smartphones will improve drastically. The consumer business, we will stick to growing that business. And as for the enterprise business, from fiscal year 18 figures, we would like to double that amount to around 150 billion in several years' time. And as for Yahoo, in fiscal year 2022, we have the target of 225 billion. So those three pillars of the business, we will work to grow all of those three. When the COVID-19 situation calms down, we will be informing you more about what we will do. But amid the various changes that we are facing now, we would like to deliver firm results to you. Thank you very much. In the past, you talked about 1 trillion yen. How do you position the 1 trillion yen target? Well, could you repeat your question again? So you talked about 1 trillion yen in the past, and how is that number positioned now? It has not changed, and if there is an opportunity, we would like to get there. 1 trillion yen is just a passing point. We always have that in our minds. Thank you very much for your response.
Thank you. The next questioner is Mr. Hoshindo from Nomura Securities. Please unmute and ask the question. So I believe that industry as a whole is falling, both in terms of churn and new subscriptions. So I think the demand itself has been pushed back as an industry as a whole. So do you want to restore this in the second half? in terms of subscription. And in terms of ARPU, you have this first year discount. What is the impact of that in terms of if you convert that to an actual value yen amount, how much would that be? And also, this year that just finished, you have the increase in sales promotion, and I think you have launched a lot of sales promotion activities. So the first half, is this the same? I believe that probably it will decrease because of the situation, but you have been spending a lot in the first half, and then I'm sorry, second half, and you always try to catch that up in the first half. So what is your KPI? Would you be willing to explain? Thank you. With regards to the scenario, there's multiple scenarios which we have in mind. So as this will be a case for one kind of scenario. So let's say in second half, there's an opportunity for sales, whether it be 5G handsets, and also the 5G environment is probably advancing. So there's a lot of topics we can really work on. So depending on the environment at that time, we will be having a lot of expectations, and maybe we'll be utilizing that. Of course, that would be scenario. And the second point about first year discount, it's actually surprisingly big, at least 100 yen. And up until October, that will be applying a pressure on us. So after Q3, I think that the impact of that will wear off. So I think you can generate more profit in the second half. With regards to margin, what if there's less acquisition, there's less depreciation and amortization write-off. So the benefit will be in this later on. So there's portion that has decreased from last October and also decreased from cash flow, Corona, but this is becoming like a savings for us. So I think in the second half it'll be much easier. But the first half, we have the margin and we have the first year discount squeezed, and also in accounting treatment. I said that we are levelizing acquisition cost, and that started from FY18. 18 is this is pre IPO. So in terms of accounting, Q1 looks very difficult, but before IPO, we wanted to be profitable, and we worked very hard. So our cost tends to be heavier in the second half. And in FY19, after the IPO, we are still in the process of dealing with all the different issues. So the for Q1 profit, we wanted to make sure that we control our costs. So the last 2 years, Q1, Q2, the way the profit is generated, the way we spend cost, compared to normal circumstances, is slightly higher. So I think that will be rectified in this new year. In any case, we're looking at multiple scenarios. So our aim is to achieve increase in profit on a full year basis. So we will look at the situation carefully and deal with it accordingly. And the third point, expectations for the second half. Yes, that's a lot of expectations in the second half. Structurally, and also Corona impact, it could come back in the winter again. We can't deny that scenario, so we have to be prepared for all sorts of scenarios. So that means my last question. So FY21 March, the balance between first half and second half, and you have the peak of first year discount. The service income, you have to be, I guess you don't know, you have to, it's somewhat uncertain. The revenue projection is somewhat uncertain, I believe. But in the earlier session, you talked about cost structure and cost reform. So what is the impact of cost efficiency? What would be the scale, this magnitude of that efficiency, which you expect to realize? So that's my last question. So in short term, marketing and sales promotion are very big in terms of expense item. Meanwhile, sales infrastructure, including our distributors and sales staff, shop staff, we need to make sure that they are maintained. So we do need to spend the necessary cost there, but I think we can still achieve efficiency. With regards to structure of reform, this is not so much this fiscal year, but this is more long-term, 3-year, 5-year. So if you look at it from the long term, this year, I mentioned that costs have increased for FY19, but if you include the depreciation amortization, we would like to keep cost flat. So that will be our next maybe theme or topic that maybe we can discuss. I'm sure there's an opportunity, so please be patient with us.
Thank you very much for your response. Thank you very much. We would like to designate Mr. Tsuruo from Citi Securities. Please unmute yourself and pose your question. Can you hear me? Thank you very much for this opportunity to ask you a question. I would like to ask about LINE. In the earnings briefing, Mr. Miyauchi talked about integration with LINE, and he has said that the integration will be done by the end of this calendar year, not the fiscal year as I understood it. In December, if the integration is completed and the commitment that you're making for operating income and the net income after taxes, do you think that you would be able to accomplish it? As for LINE, Mr. Miyauchi did not clearly state the period. In the past, it was said to be October, but now please understand, this is not a set date. There is still review going on by the Fair Trade Commission. I think that there would be a lot of scenarios for the impact, but we have clearly stated that the figures that we have shown you is excluding the impact of integration with LINE. But if you talk about net income, we have 65% with Naver, and meaning that we have about 33%. So the net income impact will be very limited. So the dividend policies and the overall policies, it would not be impacted by integration with LINE. So when we have clearer picture of the integration with LINE, we would be able to disclose more, and we are waiting for the review to be completed. So I would like to refrain from commenting further. There is one additional question I would like to ask about LINE. There was a change in the shares that you have for PayPay. So when you have integration with LINE, Naver will have 1/3 of Yahoo, and they will have the interest in PayPay for around 12%. Is my understanding correct? So economically speaking, the shares is, as you say, they will have 1/3 of the holdings. So they will become a stakeholder, as you have said. Thank you. My second question, briefly, about balance sheet. EBITDA multiple has come down slightly, but this fiscal year and in the midterm, what will be the acceptable level of the net debt ratio? And when you have the COVID-19, what is your situation for the access towards the financial market? In terms of the ratio that we have, net leverage ratio, I think that it is sound. Unless there is something that's significant issue, we would like to improve it little by little each year. through doing this, I think that we would be able to have more options for the company. From our rating perspective, the same rating company has around net leverage ratio of around 2.5 times. So I think that this is reasonable. Fourth quarter had 2.3 times, and the first quarter it will deteriorate a little slightly from that, and second quarter will improve slightly. But overall, we would like to improve gradually in terms of the net leverage ratio. I think there would be no big problem with that. But if you conduct significant borrowing with the COVID-19 issue, there would be no problem in accessing the financial market. Well, our business engine is having more subscribers, and we will have more receivables from the subscription, and we will securitize it. But this is distributed towards many subscribers, so it's sound, and we have not been impacted by it. And as for the lease, we have had various cooperation from our stakeholders, and the movement has been sound. So in terms of the CP and CB, this is not something that we have to do right away, but we want to have cash at hand that would help us, and when we need to access, we will move very flexibly. Thank you very much for your response.
Thank you. From Daiwa Securities, we did not get your name, so please unmute and ask. This is Ando speaking. Yes, thank you. Good to hear from you. I have two questions. First question, your strategy beyond carrier. Maybe I think you mentioned slightly about recovering your investment and maybe generating profit, and with your minority shares and equity method, what is your view? What is your policy on that? With regards to the equity methods, PayPay, Z Holding was saying that maybe this level, same level as this year. So I think all sorts of investments have kind of peaked out. So I think I'm not too worried about PayPay. But even for other equity methods, we're seeing gradual improvements. And in fact, break-evens, profitability, I think we need to be a little more conscious about that in terms of business model-wise. So we have to discuss what is our business model when it breaks even. So we're working with the individual companies from that level. And in that sense, it's on the improvement trend. Now, there are things that we have sold off on a one-time basis. So I don't know if you look at it on a net basis. So if you could be a little patient about how we do this. So we invest, and anything that's been generating a lot of losses, I think, have come to the peak, and it's now yet to improvement. Now, my second question, going back to the corona, I apologize for that. But so, for example, in April, you must understand the business situation for April already. But in terms of increase in revenue, and also you mentioned about the impact of first-year discount, and you're already looking at the top line, and I'm sure you understand how much cost reductions you need to make. So as a telecom business, on an operating income level, do you think you can project a slightly positive number structurally. Well, cash is positive. I can be very clear about that. Because handset sales, there's a lot of cash spending, and I can say that we're positive in cash. But in terms of write-off, so acquisition is what, 24 months, 36 months, we traded already. So impact, if the sales decrease, margin decrease, and that benefit will be recovered within 2 or 3 years. And then in terms of write-off of first year discount, I mentioned that it's 1,000 yen, and we also have the legacy 500 yen, and we have to do this double treatment. But even without them, Q1 and Q2, I think it's somewhat challenging. That's the basis, the foundation. So in year 1 and year 2 of IPO, we were adamant that we are Q1, Q2 profitable. But I think more so than that, I think we want to have a full year view, and wherever we need to spend, we will do so. Where we save, we save. We want to be flexible. So as you can see from the diagram, in terms of year-on-year comparison, I think first half sluggish, second half more bullish upside. And I think if you look at this, the second half, the sales revenue is better, and the acquisition cost is levelized. So the volume fluctuation will be reduced. And if you think about that, maybe at this timing, the reason why I displayed this is that the fact that we're 61% in operating profit for the first half is a little bit strong in terms of numbers. And we want to make sure that we finish well at the end of the year. But I repeat again, but if you take Corona, for example, we don't know how long it will last. We could come back again, relapse. The impact is big. And also we have to look at the area which will be impacted. There's different cases, scenarios that we can't just draw one scenario for one situation. So this is the minimum, 920 billion. That's the bottom that we will be targeting, and we want to be flexible otherwise. So that's a direction of disclosure. In that sense, Q1 acquisition decrease and marketing effect is diminishing. So we will work on cost reductions for sure. Z Holding placements is difficult. In light of that, they're also working on cost reductions. They have already made that clear. So we have the same line of thinking on our side. So with regards to the cost, I think you can say that we're in the phase where strengthening cost reductions. And one more thing, clarification. Traffic, mobile traffic, is mentioned that there's a slight growth. Would this lead to increasing operating income? I guess from a third-party point of view, maybe not, it might be marginal, but can I assume that there'll be a positive impact on operating income? Well, a lot of this is fixed price. So, and it's also, there's some discounting as well. So this is not leading directly to increasing revenue, but I think it's offsetting some of our negative factors. That's that element of that for sure. Thank you.
Thank you very much. If there are any other questions, please press the raise hand button. Thank you very much. We would like to conclude the investor briefing for the earnings results for the fiscal year ended March 31st, 2020. This investor briefing will be streamed on demand on our website. Thank you very much for gathering out of your busy schedules. Thank you. Thank you very much.